Hey everybody, welcome back to the channel. My name is George Herrera with the New York home teams at Keller Williams Realty. In today's video, I'm going to be talking about how you can prepare for a mortgage rate drop. So for mortgage rates as they start to come down or as they continue going down, how you can prepare. So I know there's a lot of home buyers that have been on the sidelines, or when mortgage rates were spiking late last year, a lot of home buyers either got priced out or they decided to just wait until rates come down. And what we've seen is that I think in about October, November of last year, we got to the peak, which was 8% mortgage rates. And as of right now, we're in the low sixes. So we're around 6.2%, 6.25%. So like 6 to 6.25. So we already are almost 2 full percentage points below the peak from late last year. And so I recently got an article from one of our buddies at Cross Country Mortgage, and the article stated how to prepare for mortgage rates when they drop. So I thought this was very timely, very interesting, and I figured I'd share it with our viewers here in case you're thinking of buying, whether it's now or down the road in the near future, 1 year, 2 years, as the mortgage rates come down. You may be having that in your mind where you would like to buy something and you're just waiting for rates to drop. Rates are now already have been trending down, and the rate cutting cycle hasn't even started. So most likely they will continue to trend downward. And so these are some key things that you can keep in mind. So number one in the article, it says 5 ways to prepare for mortgage rates to go down. Number one is improve your credit score. So definitely, if you're thinking of buying a property within the next 1 to 3 years, you should definitely pull your credit report if you haven't already. Make sure you understand your credit score, see where you're at. Now, the minimum credit score for an FHA loan is 580 or so. So even if you have not the most stellar credit, you can still get approved for a mortgage. But obviously, the better your credit, the better the products that you'll qualify for, and the lower your rate. Typically, you'll get a better rate if you have better credit. So take a look at your credit report. Make sure there's no derogatory items. Make sure there's nothing on there that shouldn't be, and get your credit report, credit score as high as possible. So that's something you can start doing now as we start the downward trend in the mortgage rates. So improve your credit score. Some quick tips for that: pay your bills on time every month. That goes without saying. Reduce your debt. Pay off any debt. If you're thinking of buying, then the best way to look good on paper is when you have no debts or very little debts. So pay down your debts as much as possible. Avoid opening any new credit accounts. So if you are planning to buy within the next 1 to 3 years, don't buy the new car. Don't get the loan on the new car. Don't take out any new loans. Don't finance any new big purchases. Just wait until after you buy to do anything like that. But for now, you would want to make sure that your credit looks really clean and very minimal in terms of debts. So that's the way that it will definitely make you look good on paper when you go to apply for the mortgage. Avoid opening new credit accounts. Check your credit report for errors. This happens all the time. There might be some errors on there, so you want to dispute those and make sure that everything is reflective and accurate. So number 2 is assess your debt to income ratio. This is a big one too. So the debt to income ratio, it compares your monthly debt payments to your gross monthly income. And the way you find out your DTI is that you divide your gross monthly income by your total monthly debt payments and multiply that by 100. So you're pretty much getting a ratio, and it comes out to a percentage. There's a front end DTI ratio and a back end DTI ratio. One of your debt to income ratios will include your principal, interest, taxes, and insurance, the estimated monthly payment for the mortgage. And then your other one will be just the housing expense, and one of your debt to income ratios will include all of your recurring debts from your credit report. So both of those are key to know, but you definitely want to get an idea of where you're at in terms of your debt to income ratio. Now, some other key things, some tips to improve your debt to income ratio. Again, reduce debts as much as possible. Increase income. If you can increase income over the next 1 to 3 years, if that's your plan, then showing more income will make your debt to income ratio lower, which will help you qualify for a bigger loan amount or better products. Avoid any new debt, again, just like with the credit tip, and budgeting. Okay. Number 3 we have is save for a down payment. So if you're planning to buy within the next 1 to 3 years, then now's the time that you want to start saving for the down payment. Minimum down payment for an FHA loan is 3.5% of the purchase price. So if it's a $500,000 house, then 3.5%, a little over $15,000, right? And that's the minimum down payment. So you want to make sure that you have that minimum down payment, which is at least 3.5% of the purchase price, would be the minimum down payment for an FHA loan. With an FHA loan, you can buy 1, 2, 3, or 4 family house. So there's a lot of options and opportunities out there, but definitely start saving for the down payment and just get an idea of the area that you're looking in, what the homes are going for, calculate the 3.5% of that, and that's the minimum down payment that you would need in order to be able to apply and hopefully get approved for a mortgage. So save for a down payment, right? And then the next one is going to be number 4, explore your loan options. So there's a lot of different kind of mortgages. You have FHA loans, you have VA loans, which are for veterans, USDA loans. You have non-qualified mortgage loans, which is usually for like self-employed people. It's people with more unique financial situations and non-traditional income sources. Those will be non-qualified mortgage loans. Down payment assistance. New York City has down payment assistance programs. Sony May has down payment assistance programs. NACA has down payment assistance programs. You have banks that have also down payment assistance programs. So you want to explore all those options for down payment and down payment assistance as well, and all these different kind of products. And number 5 is the tip, how to prepare for mortgage rates to go down, is to connect with a mortgage loan officer. And this is definitely by far would be your best bet, because all these tips, they would be able to give you more specific tips based on your current financial situation. My wife and I did this before we ever bought our place, 2 or 3 years before. We sat with a mortgage loan officer. We let them know what we were interested in buying, what our income was, what would we need to do, and they guided us, and they can put you on that path so that you can, whenever the time comes, you're actually ready to get approved and go out there and buy something. So if you need a recommendation to a good mortgage loan officer here in Queens, Brooklyn, New York City, feel free to drop us a line and we can connect you with someone, because this is probably the most key person that you need to speak to if you're waiting for mortgage rates to drop before you buy something. A good mortgage loan officer will be able to give you some really good advice on how to accomplish your goal, whatever that is. So they can help you by pulling your credit report, looking at your debt to income ratio, and they can give you some tips there on things to do to lower your DTI. They can walk you through all the different products that there are in order to see which one might best fit you and your needs. So that's just something I wanted to share with you. I got this article. I'll put a link to it in the description. Feel free to take a read. And also, if you have any questions or would like to speak with someone about preparing for buying within the next, let's say, 1 to 3 years, then definitely reach out to us. You can reach out to us through our website, queenshometeam.com, or you can just give us a call and I'll put all our contact info right below. All right. Thanks as always for tuning in, y'all. Stay tuned for the next episode. Take care and have a great day.